Hey, what's up everyone? In today's video, I want to talk to you guys about a few numbers that you absolutely have to know. Whether you're starting a business or thinking of starting a business, whether even if you have a business up and running already, or even if you're just gonna run someone's business one day. These are numbers you have to know as a business person, so stay tuned. So to run a business, you don't necessarily have to be an accounting genius or anything like that, but there are certain numbers you absolutely have to know and it's not negotiable. In today's video, I want to break down some of those numbers, and it might be a little bit technical here and there, but trust me guys, this is necessary because without these numbers, like, you don't really truly understand what your business is going through. And as much as you might understand it operationally and from a strategic level, you definitely do need the numbers to make a story and to make sure that everything makes sense at the end of the day. So let's dive right into it and not waste any more time. Have you ever seen a show like Dragon's Den or Shark Tank? If you have, you'll always see that there are always entrepreneurs on this show that have wonderful businesses. They have beautiful businesses. However, the problem is that they don't know the numbers. They don't know what their profit margins are. They don't know how much stock on hand they have. They don't know the numbers. And then the investors are unable to assess as to whether this is a good investment opportunity for themselves or not. So this would apply whether you're going to a bank, whether you're going to a private investor. You are definitely gonna need your numbers. And if you do want to scale up your business one day, you are gonna need private investing, whether it's come from an individual, whether it come from another company, whatever the case may be, you will need to know your numbers. You will need to be able to speak to those numbers, and then all the other juicy operational things also do matter. But today's video, I'm just breaking down some of the numbers just so it can be easy for every entrepreneur out there who is interested in starting a business or currently does have a business that they might want to seek funding for. So then this video is definitely for you. These numbers are in no particular order. However, I'll just be mentioning them as and when they come to my mind, right? So first up, we have profits. Profits is a very simple number to get. It's all the money coming in, your income, minus all the expenses that you have. It gives you your profits. It really is important for every entrepreneur to keep track of this number and always know it, because it's also used as one of the valuation techniques to value a company. So to value your specific company, a profit measure might be used as well. So also things like tax, right? You're not taxed on how much money you make, you are taxed on how much profits you have. So that's why you get big companies such as Apple and Amazon specifically, that hardly pay any tax considering how much money they bring in. That's because they don't have large amounts of profits. However, they do have a large amounts of revenue and income that are being generated. However, they use that income and money to grow their business instead of keeping it as a profit and giving it out to shareholders in the form of dividends and so forth. So definitely the first number you need to know is what is your profit. Next up, we have revenue. Revenue and sales, same thing actually. But what I want to say, revenue is very important. You need to know it. You need to know how many products have you sold, at what price points have you sold those products. It really is important to know this because it also assists you in forecasting, which should be realistic, guys. It should be realistic and based on some sort of survey or some sort of assumption that is accurate, that makes sense, your forecast that is. So, but however, your revenue is not a forecast. The revenue that I'm talking about right now is the actual sales that your company is making. It shows you how big you are and how much market share you might have in that industry. And this is definitely a number that you need to know as a property investor, as a business person in any industry actually. So definitely know what your revenue is. Next number you need to know in your business is the total expenses. Now, don't confuse total expenses with your cost of goods or cost of sales. This would be how much it actually costs for you to generate and make a product. No, this is not the cost that I'm talking about in this case. I'm talking about your total expenses, which is inclusive of that, also including your marketing costs, any other depreciation costs you might have, any other employees that you may be paying, and any and every single cost that is that is costing your company, you need to account for it, you need to know what it is, and preferably you need to make sure that you're spending most of your money on tax deductible expenses. Because if you aren't spending a lot of money, if you're spending a lot of expenses but they're not tax deductible, this is not going to really benefit your business. However, if you do spend on expenses that are tax deductible, you're likely going to grow your business and reduce the amount of tax that you're going to pay. If you do want to know what tax deductible expenses are, you can check out Section 11A of the Income Tax Act. I'm not a tax practitioner, however, I do know where to find it in the Tax Act, so just go check it out. There's a lot of articles and a lot of case studies that have been done on tax deductible expenses. So if you are interested in that, go check that out. And yeah, if you're ever struggling to find a price for a product that you have, consider all your costs and then find a way in which you can break that cost down into a per product kind of metric, right? So this is a very complex way of doing things, and if you aren't really specifically sure about exactly what I'm talking about, you can go on YouTube. There are many other YouTube videos that can explain this concept to you of how to price your product. It's not only based on a mathematical calculation, however, it is also about the market itself, right? You can't just price your product at 1,000 rands just because it costs you 900 rand to make it and you've included all these other fictitious costs as well. No, it doesn't work like that. There's a financial metric to it, but also always consider the qualitative side of things, right? The next number we have is your EBITDA. EBITDA is your earnings before interest, tax, depreciation, and amortization. So your depreciation and amortization are non-cash items, which is basically when you're depreciating your assets, the assets of your company, and then interest and tax. We all know what interest and tax is, right? So why is this number so important? This number is important because it helps you. It can be used in a valuation technique where you take your EBITDA and you multiply it by a PE multiplier to find a valuation of a company. It's really good if you want to also compare it up against other companies, and it's also a good number to know just to see how well is your company doing if you're going to be excluding all your interest and tax expenditure and depreciation and amortization, because those are non-cash items. Well, depreciation and amortization, that is, those are non-cash items and on physically money coming out of your business. It's more of a wear and tear kind of thing, but at the same time it's also likely to be tax deductible. Just go check your tax legislation in that regard. And yeah, so this is definitely an important number to know: your earnings before interest, tax, depreciation, and amortization. Next up, we have cash. Cash is a very important number to know because sometimes having too much cash actually might not be a good thing. Because if you have too much cash, that means you're not reinvesting that money to grow your business. It means you're not paying out your shareholders and then maybe they might be upset. It means that you are actually not doing what you could be doing to grow this business, to make it more successful, to make it bigger, and it could be seen as a negative thing, right? However, you do need to keep a balance of how much cash do you keep and how much cash do you actually use to reinvest into your business. Because in cases of emergency, you do need to have cash reserves. If you don't have cash reserves, you are going to be fucked. And whoever is in this pandemic right now that does not have any cash reserves has been seen to be either going bankrupt, or they've been having to take out a loan at a really high interest rate, or they are in essence fucked and they need to close. So you must make sure that if you are running a business, if you are thinking of running a business one day, you know how much cash you have on hand and that you keep enough cash for emergencies. And then even though emergencies don't happen all the time, you don't get pandemics happening all the time, yes. However, you never know what might happen, right? So just always make sure you have a cash reserve in your business bank account to make sure that you can survive the storm. Next one, price. I kind of alluded to this a bit earlier, but you definitely need to know what the price of your product is. And if you have many different products, then you have to know what price range at least your products range from, right? Are you offering a luxury service or are you not offering a luxury service? Because at every price point, there is a customer. And if you don't have customers, it's either you're talking to the wrong people or you're overpriced. And overpriced means you're not providing the value that is worth the price to the customer. And the customer is always right in this regard, right? The laws of supply and demand always speak to each other, and you should always consider this when you are pricing your product or your service. Pricing it might require many different metrics. Like there's no specific price point that says whenever you're offering this type of service, this is what you must get paid. No, there isn't, because as we can see it with cars, you get a car from all the way from a Picanto to a Lamborghini, right? Lamborghini is not too expensive. It just depends who you are talking to. So make sure that you price correctly your products, and as an entrepreneur, you do know what your price is for your service, and you don't hesitate whenever you are asked about your price. Be proud of it and stand to it and stick to it. Next up, you have your gross margin. Your gross margin is usually represented as a percentage, and it's basically your sales minus cost of goods divided by your sales times 100. And it really is helpful for your gross margin to be as big as possible, because it then gives you a lot of room for you to spend on other things in your business that helps you to grow your business, like marketing and branding and all those lovely things, right? Research and development and so forth. So having your gross margin, knowing your gross margin is very important, because potential investor is going to be truly interested as to how much is this company truly making based on their sales compared to their cost of goods sold. So know whatever your gross margins are and be ready to answer if someone is asking you. The next important number to know is how much inventory do you have on hand. This is really important to know, because you definitely need to know how much stock do you have in your storeroom. Assuming again that you are selling a product, you need to know how much do you have in your storeroom. Do you need to get more, or do you have too much? Now it's costing you. Maybe you might have slow moving stock. Maybe you need to replace it. Is it seasonal kind of stock? You need to know these. You need to know these things, because if you don't know them, you really are going to be destroying your business and shooting yourself in the foot if you don't know these numbers. Know how long it takes you to sell stock. On average, does it take you 2 days? Does it take you a month? Does it take you a week? On average, how long does it take you to get rid of your stock? Because this will also help you to make sure that you are never short of stock, but at the same time, you never have too much stock on hand. Because having too much stock on hand, again, is a negative thing, because depending on what type of business, obviously, that you do run, it can be a negative thing if you have too much stock on hand. It does create a lot of storage and maintenance and possible breakage and theft to your stock. So you'd rather not have a lot of stock on hand. You'd rather produce as and when required, if possible. Obviously, if it's other things that aren't possible, then this wouldn't apply. So just have a look at your business, or the business that you're looking to start, and think how you can apply this to your business. Next up, we have debt and credit. So debt is basically how much money do you owe to other people or other institutions, and credit is what is your ability to access more debt, right? So you need to know the debt that you have right now. Is it current? Is it non-current? What portion of it is current? What portion of it is non-current? So do you need to pay it off basically within this year, or do you need to pay it off in 5 years' time? Like, really start considering these things. You need to know these numbers. You need to, at the back of your mind, keep track of, not the back of your mind, actually, you need to do it on an actual spreadsheet to show how much debt do you owe and how your repayments are structured and so forth. This is going to help you to make sure you don't miss payments, so that you can have access to more debt if you do need it in the future, right? So this is now speaking more to your credit and your credit score as a company, as a business, even as an individual. It does apply as well. So the next number you need to know is your return on investment. What exactly is your return on investment? This is basically your profit in relation to how much money you outlaid for the project, for whatever investment opportunity that you've ventured into, right? So this number is given as a percentage, and there's many different ways in which you can determine whether you have a good return on investments or not, but it is a very subjective call. It's up to you what you decide. Some people might look at interest rates given by the bank and say, okay, if I keep my money in the bank, I'll get an interest rate of 6% or 7%. However, if I invested in this project, I'll be getting a return on my investment of 10%. So therefore, it's a better investment. It's a good investment. Other people might look at your cost of debt and say, okay, my cost of debt is 10% and my return on investment is 12%. Therefore, it's good for me to invest in this because my return will be greater than my cost of debt. There's many different ways in which you can determine it. However, as I did say, it is up to you. I can't prescribe, I can't tell you this is how you should do it, this is how I do it. No, I think every individual needs to determine for themselves what is a great return on investment and then stick to that number, and vary here and there based on the circumstance, but definitely it is a subjective call. Right, so that's bringing us to the end of today's video. Please subscribe to the channel if you enjoy that type of content that I'm releasing. Please subscribe and like the video and hit up the notification bell so you never miss a video that I post. And I'll see you guys in my next video. Cheers.